crypto is still a young market, and it's these types of markets that provide the greatest opportunity for wealth creation and financial independence. Making that first million is the hardest, but the constant gamble on moonshot crypto to make it is a sure path to disaster. Sure, you might get lucky and pick the next Shiba Inu, but the odds are heavily stacked against you. I can promise you only a tiny number of people buy any meaningful amount of these moonshot cryptos and hold on long enough, but not too long, and sell to realize life-changing gains. This video is for entertainment and education purposes only. Past results are not indicative of future performance. You must trade and invest at your own risk. To get rich in crypto, or any investing for that matter, takes time, but that time to your first or maybe even second million can be shortened. One approach I like to use is buckets, keeping separate buckets for separate purposes to create wealth. And the catch is, all of the buckets can be related to crypto, although they don't have to be. The first crypto bucket is long-term, slow and steady gains. The time horizon for this is multiple years and is very big picture. The second crypto bucket is short-term trading, be it day trading or swing trading. Now the time horizon on this is much shorter, expecting to realize gains every week or every month. The third crypto bucket is the moonshot bucket, just to satisfy that inner gambler. Of course, there are an infinite number of buckets and approaches, but this video is about accumulating long-term wealth and keeping it, and we'll be focusing on bucket number 1. If you're in the market for a new or separate bucket for 2022, Aussies and New Zealanders, SwiftX will start you out with $10 worth of Bitcoin for free by using the link in my description below. Before I show you my investment bucket and how it has performed since inception, let's see how two of the most popular investment strategies have performed not only this year, but for the past few years. First up is the famous or infamous dollar cost averaging approach. Now, I won't bore you with all the details, but quite simply, it's just buying the same amount of a particular asset, stock, crypto, whatever it is, at set intervals. And what that looks like for Bitcoin specifically, where those green dots are, that's just labeling the first of every month. So what dollar cost averaging would be doing would just be buying, say, $100 on the first of every month, and that's where the purchases would be on Bitcoin. The main idea behind dollar cost averaging is that time in the market is better than timing the market. So just simply buying every month, regardless of price, over the long term should do pretty good. So let's see how it performed in Bitcoin for 2021. And before we jump over to the table to see the percentage return, you can already see that from where Bitcoin's currently trading at, a bunch of purchases are going to be at break even or better because the purchases were below where the market currently is. But there's obviously still a few that are in losing positions. So dollar cost averaging, it will average them all out. So since there's more purchases below the current market price, we'd expect dollar cost averaging to be putting in gains for 2021. So after 12 purchases over 2021 averaged out as per dollar cost averaging, 2021's put in a gain of 14%. Now, most people are used to 100 or 1000% returns in crypto, but a simple dollar cost averaging 14%, you decide for yourself whether that's any good or not. But typically speaking, 14%, not too many people get out of bed for that. Now, what if we go back just a few more years to see how the same approach would have performed? Because to be fair, Bitcoin has been relatively up and down this year. We hasn't really had any long-term consistent gains. Some are calling it a big year of accumulation. Maybe that's been the case, but just simply looking at the price action of Bitcoin, it has been very choppy over the years. So we can't expect there to be massive returns for a dollar cost averaging approach just because of the choppiness. But what if we go back just a few more years from just 2021? If we go back to 2020, the same dollar cost averaging, buying on the first of every single month, put in a return of 199%. Now, still, I'm sure many of you are thinking, 199%, is that it? I'm not getting out of bed for that for crypto. Well, most other people not in crypto would think that's just an astronomical return. And we won't end there. We'll also have a look at 2019. 2019 put in a return of a whopping 22%. Looking at 2018, put in a return, a dollar cost average return of a negative, you can already see it's red, of a negative 49%. Now, I'm sure most of you probably aren't too impressed. One year it lost 50%, one year it made 200%, and the other couple of years have been fairly ordinary. But for most people used to traditional markets, there is a fair amount of volatility, but these gains would still be seen as pretty good, especially in the eyes of an institution or a long-term investment portfolio. Next up is the simplest of the approach, buying and holding, buying on the first of the year and then seeing how the market went over the following 12 months. Now, granted, the year isn't over yet, but it's close enough for me so I can start planning for the next year. So in terms of Bitcoin and 2021, we can see that a buying and holding approach, a very simple approach, made a return of 69%. Buying on the 1st of January, the market is still up 69% despite all the volatility throughout the year. And looking back to the previous years, 2020, buying and holding, 302%. Then looking at 2019, 94%. And then in 2018, the bear market year, a simple buying and holding approach lost 73%. So this is the main advantage of dollar cost averaging. You do reduce the drawdowns, but as you can see, you massively reduce your returns as well. So purely by looking at this, it's pretty easy to dismiss dollar cost averaging, but the catch is not everybody has 12 months worth of savings to put into the market on the 1st of January. And by looking at a buy and hold approach to assume those types of gains, that's what it's assuming. It's assuming the full amount of investment capital is ready to go on the 1st of January. And for most people, that's just not the reality. That's a big part of the reason why dollar cost averaging is so popular, because it is just a matter of getting that regular money into the market at set intervals and not worrying too much about price, just expecting that the long-term growth is going to be there and all the ups and downs are going to smooth out over time. But is there a better way that kind of meets in the middle between dollar cost averaging and buying and holding? Well, I've shared my pyramid strategy on this channel before, where I talk about buying when the market is low in larger quantities, and as the market goes up, buying less so that the pyramid isn't so top heavy, and when the market corrects, most of the gains are still held onto. Now you can go back and watch those previous videos, and I'll also link them in the description below for you. But in the SwiftX account that I've made public on the channel, we made a couple of purchases of $1,000 each, while they looked like there was going to be a foundation and the bigger picture trend was up. So that was September's job. In October, the market had already moved away, so there was no action taken. Then in November, as the market looked like it was going to hold its all-time highs and continue on, I put in some very, very small purchases relative to what was already in the market. I cascaded it down in anticipation of a bigger pyramid as the market was anticipated to go higher, but it didn't. So even though I bought well above where the market is now, let's see how the pyramid approach fares compared to the other two strategies. And so that we're comparing apples with apples, this account started at the beginning of September. So the dollar cost averaging would have been purchasing at the green dots, the first of each month, then also the buying and holding on the 1st of September to where it is now, that's the orange line, and then you can see my purchases in yellow in terms of the pyramid approach. Jumping into my SwiftX account, which I've been sharing on this channel, in the bottom left, you can see Bitcoin is up over 8%. Now, I've used exactly the same strategy on Ethereum and it's gone much better. So it's not just a matter of being a Bitcoin only approach. So let's go ahead and I'll even round it down, put 8% into the pyramid return. Then we can see how the other two approaches have fared over the same period. Dollar cost averaging over the same time, there was 4 purchases on the 1st of each month at the green dots. That's actually down by 4%. And then the simple buy and hold from the 1st of September, the start of this particular account, actually goes back to here. The simple buying and holding approach from the same period has returned a grand total of 3%. So we'll update the 3% for the buy and hold. And as you can see, the returns are obviously much better by having some kind of intervention, having some kind of input as to where to be buying and selling and in what amounts. But of course, these returns still aren't astronomical by any means, but considering the nature of the market, making gains when the market has been very volatile and almost where it started, I think is still pretty good. So now looking and planning ahead to 2022 and my belief that crypto is going to outperform money in the bank by many multiples, I have to have some kind of idea of what I'm going to be doing, taking action when the new year rolls around. Dollar cost averaging has significantly outperformed money in the bank, and the pyramid approach is obviously outperforming the lot. So what I want to be doing is getting some regular money into my account so I can manage it, split it up into my separate buckets, and either put some into dollar cost averaging and also some into the pyramid approach. What you can actually do in SwiftX is set up a recurring order. So what that does is you can make a new order, select whatever assets you want, and then SwiftX will automatically make those purchases on your behalf whenever the money hits your account from your bank. I've set up a monthly transfer from my bank to SwiftX, and it will automatically buy 20% of that amount into Bitcoin, ETH, and then 60% into USDC. Now I've set it up this way because the 20% of each is going to be my dollar cost averaging, and then the 60%, I'm going to be putting that aside for my pyramid and maybe even a couple of moonshots here and there. The 12th yearly bar of Bitcoin is drawing to an end, and with this year closing in the green yet again, that makes 10 years out of 12 that Bitcoin has made gains. Nobody knows what 2022 brings, but by thinking more than 1 year ahead is the way to wealth creation. And with the year drawing to an end, I want to thank you for your likes, views, comments, and time throughout the year. It really does mean a lot, and until next time, I'll catch you then.